Welcome to the deep dive. Today, we're peeling back the layers on a really fascinating and frankly pretty turbulent period for digital assets.
Yeah.
We're looking at a collection of intelligence that paints this picture of really stark contrasts. It reveals a market sort of caught in a dynamic tension, between these immediate shocks and then this powerful long-term vision.
Yeah, it's quite the picture.
On one hand, we've just seen this, rapid-fire stress test,
Yeah.
a massive sell-off, cascading liquidations, and, hundreds of billions wiped from the market in, like, the blink of an eye.
Right.
Yet beneath that really volatile surface, long-term fundamentals for Bitcoin seem to be quietly getting stronger. It's like watching a financial tug-of-war, isn't it? Short-term pain wrestling with long-term conviction.
Absolutely. And this isn't just, random market noise. It feels more like a strategic turning point. We're seeing a classic market deleveraging event. It's flushing out that speculative excess. But at the same time, there's this significant accumulation phase happening, driven by a new class of long-term holders, people who aren't really sensitive to price dips.
Hold on.
Understanding this dichotomy, this push and pull is, I think, critical for anyone trying to make sense of the current environment. And that's precisely what we're going to try and help you unpack today.
Right. Our mission is to cut through all that noise, look at these opposing forces from our sources, and give you the clearest possible view of where Bitcoin truly stands right now. So, let's dive in. Okay, let's start with the immediate drama, because the last 24 hours have been, nothing short of eventful. We saw a single large-scale sell-off from a long, dormant whale. And that seemed to trigger this massive cascade, over $715 million in leveraged liquidations.
Wow, yeah.
Which then pushed Bitcoin down to a 7-week low, erasing more than $200 billion from the total crypto market cap. It was a dramatic swing, to say the least.
Oh, definitely. And this was a textbook leverage flush out. The market was really primed for it. There was just an excessive amount of leverage built up in long positions. So that initial large sale, what was it, 24,000 BTC, valued at about $2.7 billion. That created a sudden supply shock.
Right.
And what happened next was just a classic chain reaction. Prices fell, hitting stop-loss orders, hitting liquidation triggers for those leveraged positions, which, of course, forced more selling, driving prices even lower, and triggering yet more liquidations. It's a self-reinforcing downward spiral, really, until that excess leverage is cleared out.
So like a financial domino effect. The sources actually use that term, and they mention it flushed out weak hands. Can you elaborate a bit? Who are these weak hands typically in crypto, and what does that flush out really signify for market health?
Yeah, the on-chain data gives us a pretty clear picture here. We saw a significant capitulation among what we call short-term holders. That's basically anyone who's held Bitcoin for less than 155 days. Over 20,000 BTC from this group were sold at a loss just since Sunday. And there was a peak of 23,520 BTC sent to exchanges right during that sharpest decline.
Okay, so the newer entrants felt the most pain.
Exactly. It tells us the pain was really concentrated among these newer, likely more leveraged participants. And while it's painful in the moment, this process is actually healthy in the long run because it removes that speculative froth and establishes a more stable, more resilient foundation for future growth.
Okay, looking at the charts, Bitcoin fell sharply, didn't it? From above $117,000 down near $108,762. The market definitely struggled, but interestingly, trading volume actually surged by 28% during all this volatility. So as we move forward, what's crucial to watch for now on the price front? What are the key levels?
Well, if we connect this to the bigger picture, the market structure. Those short-term support levels are now broken. So the bull market support band, BMSB, becomes the really critical floor to watch. This band, it's currently around $107,980. That's basically the 20-week exponential moving average, the 20-week EMA. And historically, this has been a crucial line of defense in bull market. A sustained weekly close below that level, that would be a significant bearish signal. It could indicate a potential longer-term downtrend. On the upside, reclaiming the $111,000 to $112,000 zone is the immediate hurdle, and getting back above $122,600 would really be needed to confirm that bullish momentum is back.
But here's where the story gets really interesting, right? That initial narrative around the whale's move kind of unravels quickly. This dormant whale, the one who kicked off the sell-off after 5 years of doing nothing, They didn't just cash out, did they? What did they actually do with those billions?
Yeah, this raises a really important question. Was it just an exit? Well, a deeper analysis from our sources shows it was far more sophisticated than that. It was a calculated capital
A
rotation.
rotation, how so?
The proceeds from selling those 24,000 BTC were immediately used to acquire over 400,000 ETH Ethereum. And it didn't stop there. The entity, whoever they are, then opened leveraged long positions and initiated staking positions with the newly acquired Ethereum. So this wasn't panic selling at all. It looks like a high conviction macro level trade. They're clearly betting on Ethereum's outperformance, at least in the near future.
That's a really significant move by a major, presumably long-term market participant.
Yeah.
What impact could that kind of high conviction trade have on market sentiment, future institutional strategies, particularly thinking about Bitcoin's dominance versus the broader crypto market?
Well, it's fascinating because this individual action aligns perfectly with broader market data we're seeing. Over the past week, spot Bitcoin ETFs, they've seen significant net outflows, over $1.17 billion in just 5 days.
Okay.
But in stark contrast, Ethereum ETFs are attracting massive inflows. The estimate is $2.5 billion in August alone.
It's a huge divergence.
It really is. And it suggests this whales trade might actually be a leading indicator of a wider institutional capital rotation. Now, Bitcoin obviously remains the preeminent store of value, but sophisticated investors might be increasingly allocating new capital to Ethereum. Why? Well, for its higher beta, meaning its price tends to move more with the market, its yield potential through staking, and its expanding utility in DeFi, decentralized finance, and also in real-world asset tokenization, bringing things like real estate onto the blockchain.
So this isn't necessarily like a doomsday scenario for crypto overall, but
Yeah.
maybe more of a profound shift in focus within the space.
Yeah.
It feels like a testament to the evolving, multifaceted nature of this whole asset class.
I think that's a good way to put it. It's maturing, diversifying.
Now, as if these market-specific events weren't dynamic enough, this whole thing happened within a broader context of macroeconomic sensitivity. What external forces were kind of amplifying the impact of that whale's move, maybe creating this extra volatility?
Yeah, the macro environment is definitely playing a big role. Market sentiment remains acutely, almost obsessively fixated on signals from the U.S. Federal Reserve. You had initial hopes for a September interest rate cut, right? Fueled by Fed Chair Jerome Powell's earlier remarks. But those have been dampened by more recent hawkish statements from Cleveland Fed President Beth Hammack. She emphasized that inflation just remains too high. So this ongoing uncertainty alone creates significant market jitters. Makes every data point, every comment highly scrutinized.
Right. And then there's this unprecedented political pressure we're seeing. Our sources highlight President Trump's move to fire Federal Reserve Governor Lisa Cook, citing allegations of mortgage fraud. Now, that's reported as a legally questionable action with potentially far-reaching implications, isn't it?
It certainly introduces a new, and I'd say critical, dimension here. It's a direct challenge to the Fed's traditional autonomy. The move is widely interpreted, according to the sources, as an attempt to install politically aligned individuals, perhaps to advance a specific agenda, namely pushing for lower interest rates. This injects a whole new layer of political risk right into monetary policy. And that unsettles markets because they rely on the central bank's independence for stability and predictability. So this kind of event can definitely amplify market reactions to specific triggers, like the Bitcoin sell-off we just discussed.
And it's not just the Fed, right?
Yeah.
We also have geopolitical and trade tensions bubbling up. The announcement of potential 50% additional U.S. tariffs on aluminum and steel. That creates a broader risk-off environment. Investors tend to pull back from assets perceived as riskier in times like these. So Bitcoin isn't just reacting to its own internal crypto dynamics, but also to these powerful global forces.
Exactly. It's all interconnected.
Okay, so despite all this short-term volatility and the macro pressure, our sources reveal a contrasting and profoundly bullish long-term signal for Bitcoin. It seems there's this fascinating divergence playing out in the institutional landscape right now.
Indeed. And this is really key. While some, let's say, tactical ETF investors might be reducing their exposure, maybe reacting to the immediate market dip, there's another very different segment. These are permanent capital holders, think corporate treasuries, for example, and they're displaying unwavering conviction.
How so?
For them, this price weakness isn't a cause for alarm. It's actually an opportunity for strategic accumulation. They view a price dip as a chance to acquire what they see as a scarce, valuable asset at a discount.
Which leads us to something truly groundbreaking, I think, the emergence of sovereign-level interest in Bitcoin.
Yeah.
Tell us about this proposal in the Philippines, because I feel like a really significant shift.
It is. This is a major long-term indicator, potentially, of Bitcoin's growing legitimacy on a global scale. There's a legislative proposal in the Philippines. It's actually called the Strategic Bitcoin Reserve Act,
Hmm.
and it would mandate the country's central bank to acquire 10,000 BTC over 5 years. And the explicit goal stated, to help pay down national debt.
Wow. Using Bitcoin to pay down national debt.
Exactly. And this move is kind of further bolstered by comments from Japan's finance minister, Katsunobu Kato. He publicly endorsed crypto assets as a valid component of a diversified investment portfolio. That reflects a notably permissive, even encouraging stance from a major global economy like Japan.
That really does feel like a game changer.
Yeah.
What does a country like the Philippines potentially adopting Bitcoin for national debt signal about the asset's maturation beyond just individual investors or even corporations?
Well, it signals a potentially profound shift, this divergence we're seeing, between those tactical ETF flows and this strategic corporate or even sovereign accumulation. It suggests the market isn't monolithic anymore, it's segmenting. Short-term volatility, often driven by this kind of deleveraging, is increasingly providing what look like attractive entry points for powerful, long-term strategic buyers. And this process, over time, could establish progressively higher market bottoms, reinforcing Bitcoin's long-term value proposition as potentially a reserve asset.
The global regulatory landscape is also obviously a huge factor in Bitcoin's journey and adoption, what's happening over in India. That seems particularly insightful about how regulation can sometimes backfire.
Yeah, India's initial approach is a fascinating case study. They implemented a pretty punitive tax regime, a 30% tax on gains, plus a 1% tax deducted at source TDS on spot transactions. And this, somewhat inadvertently, crippled their legitimate spot market.
How so? What happened?
Well, it essentially drove activity underground into this massive, less transparent shadow market for crypto derivatives. Futures trading volume there is now reported to be more than 3 times the volume of spot trades. Traders cleverly exploited a loophole because futures are cash settled, and under the current rules, that's not considered a transfer of a virtual digital asset, so the TDS didn't apply in the same way.
Huh. So the government's strict rules basically backfired. It drove legitimate activity underground, presumably costing them tax revenue they wanted. But now it sounds like they're rethinking that approach.
Precisely. The Central Board of Direct Taxes, the CBDT, has initiated a formal consultation. They're actively seeking feedback on these very issues. It feels like a pragmatic admission that their initial strategy was counterproductive. A potential policy shift, moving from punitive towards more structured, maybe balanced regulation in India that could legitimize crypto for 1.4 billion people and potentially bring billions back into the transparent taxable market. That's huge.
Meanwhile, here in the U.S., there seems to be some renewed optimism for more regulatory clarity on the horizon. What are we seeing there?
Well, Senator Cynthia Lummis, who's known as a prominent crypto advocate, has publicly stated a pretty significant goal. She wants to get a comprehensive U.S. market structure bill passed by both houses of Congress and signed by President Trump by the end of this year, with potential implementation as early as 2026. Now, if that happens, it would be a landmark achievement. It would finally end years of regulatory uncertainty and likely unleash significant institutional investment that's probably been waiting on the sidelines for exactly this kind of clarity.
Okay, so shifting gears a bit from the regulatory and market moves, let's look at the bedrock, the foundational strength of Bitcoin's network itself. Amidst all this price action and drama, how are the fundamentals of the actual network holding up?
They're incredibly strong. The fundamental health and security of the Bitcoin network have arguably never been stronger. Mining difficulty, which is a measure reflecting the computational power securing the network, has reached a new all-time high. That indicates immense and growing security.
Right.
And you see publicly traded mining companies like HIVE Digital Technologies aggressively expanding. They're aiming for 25 exahashes per second. That's EHH hash rate by Thanksgiving. That effectively doubles their Bitcoin production capacity just since May. And this aggressive scaling is primarily driven by the need for efficiency, especially after the recent halving event.
And maybe the most telling signal of mainstream sort of adjacent acceptance in this area.
Yeah.
Alphabet, Google's parent company, has acquired stock warrants in a Bitcoin miner, TeraWulf. Now, that's not a direct investment in Bitcoin itself, but it feels like a huge nod to the industry, doesn't it?
Absolutely. It's a strategic acknowledgement. It shows that the mining industry is growing in importance, not just as a crypto segment, but as a major consumer of energy and data center infrastructure. Alphabet likely views it as a strategic business opportunity, a new class of industrial scale client for its services, potentially. This whole trend of industrialization and professionalization of mining, it really ensures the long-term security and stability of the Bitcoin network, which is, at its core, the foundational value proposition.
So as we wrap up this deep dive, it's really clear we're in a truly fascinating period for Bitcoin, a real crossroads. On one hand, yes, the market was violently shaken by that leverage-driven sell-off, a stark reminder of its susceptibility to short-term speculative flows. But then, looking beyond that immediate noise reveals these powerfully bullish long-term signals.
Yeah, I think we're navigating a phase of, let's say, tactical caution, but with a strong undercurrent of strategic optimism. You should probably be prepared for continued range-bound volatility, maybe potential retests of those key support levels we talked about, as the market fully digests this deleveraging event. However, for anyone with a longer-term horizon, this period of perceived weakness is happening alongside a significant and measurable strengthening of Bitcoin's fundamental investment thesis.
Okay, so to keep your finger on the pulse, what should people be watching? Keep a close eye on that Bitcoin ETF flow data. Will the outflows continue, or will tactical buyers step back in soon? Watch Bitcoin's price action closely around that $108,500 support level. That seems critical. Any further regulatory chatter, especially from India or the US, will certainly be impactful. And finally, maybe monitor Ethereum's relative performance. Continued outperformance there would lend more credence to that significant capital rotation narrative we discussed.
Exactly. And this whole dynamic creates a powerful environment, potentially, where short-term volatility provides, or could provide, compelling entry points for long-term strategic buyers. It really highlights that the asset class is maturing, I think. It's separating that speculative froth from the deep conviction of more permanent capital.
So as you reflect on today's deep dive, maybe consider this. In a market that just went through a massive $715 million liquidation event, what does it truly mean when major long-term players seem to be using that very same event, either to aggressively accumulate more Bitcoin or to strategically rotate into other digital assets like Ethereum? What does that tell you about the future of digital finance and maybe where the smart money truly sees long-term value? Thanks for diving deep with us today. We'll see you next time.